You're not gonna believe this. More than 90% of traders actually lose money. Shocking, right? But hey, don't sweat it. There's a way to change your luck with a trustworthy and simple strategy perfect for both beginners and pros. You can turn things around and start stacking up those wins. Hang tight and I'll spot the beans on how to make it happen. So, for this strategy, we'll be using two free indicators, and the first one is the linear regression candles. To slap it on your chart, head over to the TradingView, choose a preferred trading security and time frame. I'll be using 5-minute gold chart for this demo. Then simply click Indicators and search for linear regression candles. And add it to your chart. To optimize the indicator for our strategy, we'll need to adjust a couple of settings, but it's a total breeze. In the input section of the settings window, just set the signal smoothing to 14. And the linear regression to 14 as well. After that, hop on over to the Style tab and turn off both linear regression candles option. Lastly, feel free to tweak the plot option to make it easier to see on the chart. And that's all there is to it. Now that the indicator is all set up, you might be thinking, how do we actually trade with this thing? Here's the deal, we can't rely solely on this single indicator, so we'll need another one to the chart. But hold your horses, I've got to share something crucial with you. If you haven't subscribed to the TradeGenius channel yet, you're missing out on a gold mine of killer trading strategies. We're talking over 300 of them. Subscribe to stay in the loop and binge watch our videos to become a trading pro in no time. Alright, now that you've hit that subscribe button, let's get back to the strategy and add the second indicator. Time to bring in the big guns, the EMA trend meter. Open the indicator search bar. Type in EMA trend meter and select it. This powerful trend analyst tool uses 3 moving averages based on the same baseline, and we're gonna optimize those settings to make it even better. In the settings, change the EMA baseline to 9. Then set EMA fast to 100 and leave the EMA medium as is. And change EMA slow to 200. Everything else can stay at their default value. Now in the Style tab, turn off the first shapes option. Feel free to play around with the appearance of the other settings to suit your taste. Now you might be wondering, how do we trade with these two indicators together? Don't worry, I've got your back. Here's the lowdown. To go long, we need the price candles to be above the regression line, then deep below it, and finally close above it again, which can call a bullish crossing. But to enter the trade, we need one more confirmation signal. At the same time the candle closes above the regression line, the EMA trend meter oscillator should have all its components showing green. This confirms the bullish momentum we're looking for in the market, giving us the go-ahead to proceed. With all entry conditions met on this candle, we're all set to enter the long position. And to cover our bases, we'll place the stop loss just below the recent market swing low, minimizing potential losses. As for take profit, let's aim for 1.5 times the risk, balancing risk and reward nicely. And to execute a sell trade, we'll first need the price candles to be positioned below the regression line. Next, candles should briefly rise above the line and then close below it again. This is what we call a bearish crossing. But hold on, before jumping in, we need a confirmation signal. This is where the EMA trend meter oscillator comes into play. At the same time the candle closes below the regression line, all the components of the oscillator should be red. This informs there's a bearish momentum in the market, giving us the green light to proceed. Now that all entry conditions are met on this candle, we're ready to enter a short position. And to cover our bases, we'll set the stop loss just above the recent market swing high, minimizing potential losses. As for take profit, let's aim for 1.5 times the risk. Remember, the effectiveness of the strategy depends on the current market conditions and how well you handle risk. To make the most out of it, I highly recommend doing extensive backtesting and forward testing before jumping in with your hard-earned cash. That way, you can tweak and refine the strategy, setting yourself up for a successful trading journey.